Let's talk a quick second about hard money lenders. Hard money lenders are the kind of guys that you'll see at real estate clubs. They have business cards. They're in business and make a living from loaning money. I think I break down hard money lenders a little bit later in the training in depth. But these guys are a dime a dozen. There's a lot of them. And like I said, there's even a couple of national guys that do hard money lending. Hard money lending is mostly based on the equity of the property that you're purchasing. The equity of the property that you're purchasing. If you're buying something for 60, that's worth 100, the hard money lender guy will be interested. Each hard money guy has their own criteria that they use. And I discussed that in the training later on when we discussed the lenders' units of measure. So with that said, just so you know, you can find them everywhere. Easy to locate, easy to deal with, and they always have money. Where do they get their money? Where do local hard money lenders get their money to lend? I'm going to read from the text, and I'm going to comment. Where they get their money. This really depends on the business model of each individual hard money lender. I know some hard money guys that gather their money from several investors and pool it together to fund one loan. I've also done business with others who select investors for each particular loan that they make. And there's other lenders that still do things a little bit differently. They have lines of credit, and some of them have their own cash. And once they close, they sell it off to the secondary market. Also, some hard money lenders get their money from bank lines of credit and timid money guys. And we'll talk about them in just a moment. Some hard money guys have rather substantial credit lines with local banks. They borrow the money at 2, 3, and 4% and loan it out at 15 or 16%, along with a few points thrown in for good measure. Not a bad gig if you can find it. Let's get back to talk about timid guys. Timid guys with money will often give the hard money lender the authority to lend their funds. And this is the reason that a hard money lender should be licensed as a mortgage broker, because they're going to take money from other people and they're going to loan it out. The timid guy gets an increased interest rate over what he's earning at the bank, which is probably what? 1, if anything? And the hard money guy gets points. Nice deal for both guys, as long as the loan doesn't go into default. But default is a story for another day. Closing statements. Get this. Closing statements for hard money are packed with additional costs and fluff. Inspection fees, funding fees, processing fees. If a lender can think of it, he'll try to put it on his closing statement. As a matter of fact, a hard money lender never saw a fee he didn't like. Keep that in mind when you're borrowing money from a hard money lender. And here's a perfect example. Within the past year, I borrowed money from a hard money lender. I estimated the property value as is, right there, sitting on the lot at $230,000. The hard guy lent me $95,000. Needless to say, he was a little cautious. And at the end of the day, his loan was $95,000, and I actually took $88,000 home. The difference, $7,000. That was his points, the fluff fees, and additional costs. The property sold for $235,000 in 30 days, yet I can only borrow $95,000. The tight loan to value keeps the lender safe and allows him to sleep well at night. It's not great for me, but I knew what I was going to get from this guy when I approached him. And it's part of his business model. And as a matter of fact, it's part of this business overall. Hard money lenders are also known as hard equity lenders. Their main concern for any loan is the amount of equity in the property and less about the qualifications of the borrower. Property's worth 230. I got 95,000. Come on, man. He gave me a third of it. But all right. I'm not whining. I am whining, but I'm not whining about it. Hard money guys, they're in the business to make money. They got to protect themselves. I understand. Hard money guys usually rely heavily upon LTV and the adjustment in their favor thereof. In other words, you say it's worth 230. He's going to say it's worth 95 to me. I can give you 95 on it. Got to get used to it. This also helps explain their usually very low valuation. So I'm not suggesting that when I asked Brad to borrow the money that it was only worth 95. It was worth considerably more than that. But 95 is how much he wanted to get into it for. Oh yeah, and on my deal, my interest rate was 16.5%. Wow. With 2.5% late fee and no grace period. Some hard guys charge points up front. Some guys charge them in the back. Some guys have prepayment penalties, and some guys charge them all. It all depends on who you're working for. And don't let them think that you're desperate, because it goes up if you are. Now, I just took 5 or 10 minutes beating the heck out of hard money guys because they're tough. They are tough. But there are some benefits for dealing with these semi-loan fish. I know fish and poker is the guy at the table that everybody's taking advantage of. I just didn't want to use loan shark because that has such a terrible connotation to it. But these guys are loan fish. They're definitely in it for themselves. But there are some benefits, and here's one. Hard money is always available. If you talk to Brad and he says he's going to fund something, he's got the money, he's ready to go. You're never going to be disappointed that he doesn't have any money. Hard money can generally close quickly. That's because that's all they do for a living is close loans. So the more they can turn it over, the better off they are. So they have money always available, and they can close quickly. Not only that, because they only loan money and make money from loan origination, they're really good problem solvers because they want to help you get that money out. For example, if the property you're seeking to fund is a little tighter than they like, they might offer to cross-collateralize with another property or two that you own. And you'll learn all about cross-collateralization later in the course. As a matter of fact, I think I have a course that's called Cross-Collateralization, Personal Guarantees, and Assignment of Rents. Yep, that's it. You'll learn all about it there. I'm not a big fan, but sometimes if your lender requires it, you may have to bow up and do it. Let's see. Also, all of your loans have to be personally guaranteed as well. So what that means is you're going to give a personal guarantee on every loan that you give to a hard money guy. He's going to ask for it. You have to give it. If I were a hard money lender, I would also ask if you own your personal homestead with your wife. I want your wife on that note also. I mean, there's some things in Florida law that you can't attach somebody's homestead, but I just want the fact that the wife and the husband are signing the note personally. There might not be a lot I can do, but can you imagine what it would be like if you borrowed money, you asked your wife to sign the note, she signed the note, and at dinner every night she has to ask you about it? Now, I'm not saying everybody's wife does that. Mine would. So it's just not, I mean, it's something you have to do. Swallow hard and do it. You have to do it. Okay, let's see. Most hard money lenders have physical offices with staff and overhead, but they don't generally have storefronts like Household or Money Store. You'll recognize that when you borrow money, you're not only paying for the money, but you're also paying for the convenience as well as the availability. Sort of like buying mustard from 7-Eleven at 11 o'clock at night for $9 for a thumbful. That's right. This thing's, how much is it? $40? Hey, you want the mustard, pal? This is a convenience store. You're paying for the convenience. Same with hard money. Another feature of hard money is that the terms and rate of your loan will generally stay the same. In other words, it's going to be at market, no matter how often you borrow or how timely you repay. Because these guys are in business. It's not like you go walk into any store and buy a shirt for $10. You come back in 3 months, that same shirt's going to cost you $10 still, because they're in business. Same with a hard money guy. In other words, the establishment of relationship will not allow your terms to improve, which is one of the main reasons a hard money lender should only be used in the event of an emergency. A hard money lender is always my lender of last resort. I like private money. Of course, when I just gave the example of using hard money, my private guy didn't have any money, or he was on vacation, or for whatever reason it was, I had to use hard money. But I'm going to teach you, put it to this way. Did you ever hear there's a Pink Floyd song, and I think it's called Mother? And in the song, the lyrics say that Mother's going to put all her fears into you. Well, that's what I'm going to do. But I'm going to put my love of private lenders into you. I'm going to teach you how to appreciate it, how to cultivate it, and I think you're going to enjoy that. So I think we're at the end of this slide, and I'm very happy to say thank you very much for sticking with me this long, and I'll see you on the next slide.